Okay, welcome back to this video series on Inspired Personal Finance. I'm Stephanie and I'm really very glad to have you here today. So now that you know the right mindsets to start off your personal finance journey, you are now ready to take step one. So if you have not watched my video on the right mindsets, the right money principles, please have a look at the link shown here. Okay, so step one. Step one is actually to know where you are. They say that a journey of 1,000 miles begins with a single step. I don't think so. I think it starts with a map. So everything starts with a map and you need to know where you are. Now to know where you are, there are 5 points that you need to look at, which I will call personal finance coordinate system. The 5 points are 1. Loans. 2. The relationship between your income and expenses. 3. Emergency fund. 4. That was a bit difficult. Okay, so 4, that would be your insurance, and number 5 would be your investments. Now let's start with the loan. Some of us, well, most of us at one point of our lives or another, we have had to take loans. And that is really okay. So some of us took loans because we wanted a better life, we needed a better health, we needed education, and that's good. Or probably a bigger house for the growing family. Well, some of us would probably have spent it for frivolous things like shopping and more shoes. I spent it for on more shoes. But that is not the concern on this section. The concern is to ask you whether you have outstanding loans, and secondly, are you able to pay off your loans? If you're able to pay off your loans in a timely manner, then give yourself a tick. The second one would be the relationship between your income and expenses. Which one is bigger? Is your income greater than your expenses, or are your expenses greater than your income? Actually, your income should always be greater than your expenses, and if that's not happening, find a way to, lower your expenses or increase your income. Time is money, so I'm pretty sure you can find time to actually make your income better. So for this section, if your income is greater than your expense, give yourself a tick. The third one would be an emergency fund. Now, all of us do not know what will happen in the future, so hopefully everything goes peaceful and nice and joyful, but we still need to prepare for emergency. So you need an emergency fund, which is an amount of money that is readily accessible. So that means you can readily take from it. You don't have to sell anything, because if you sell something, if you're desperate, you'll probably sell it at a low price. So you don't want to be at the end of, short end of the stick. So an emergency fund typically is 3 months worth of your expenses, 3 to 6 months worth of your expenses. Well, nowadays, statistics show that you need about 12 months to get your next job. So you may probably want to consider building more emergency fund. I'm just suggesting. So if you have about 6 months of emergency fund, give yourself a tick. The fourth one is insurance. Now, for insurance, you need to understand where you are and understand your coverage, and you need to understand your needs. If you're single and you don't have any dependents, do you really need that much coverage? For me, I've actually let go of my accident plan because if I figured that if I meet a horrible accident, I'll end up in the hospital anyway. So my hospitalization plan kicks in. Now, it might be different for you, it might be different for your country, but check what coverage you have. Check your employment benefits, check your employment insurance, and understand whether you need an insurance. So for this section, if you feel that you're adequately covered, give yourself a clap. Now finally, the fifth one would be on investments. I would advise you, as I advise everyone to have investments, it's always wise to create alternative sources of income. So an investment is something that you have or you get right now, which you can sell for a higher value later. Now, make sure that you have a good investment strategy that is personalized to you. What I mean to say is, it has to be according to your lifestyle. It has to be according to your personality, your risk appetite, and it definitely has to be according to your goals. So make sure that your investment strategy is according to these 3 points: personality, lifestyle, and your goals. Do you have an investment strategy in place? If you have, give yourself a clap. So there you have it, the 5 coordinate system in your 5 points in your coordinate system for personal finance: loans, relationship between income and expenses, your emergency fund, insurance, and finally an investment portfolio. If you want to see the write-up, the written article on this video, please visit www.everythinginspires.com at Inspired Personal Finance section. So let me know your thoughts, let me know where you are, and in the next video, I will go through setting financial goals. And with that, you should be able to complete your financial map. See ya!